Hi, I hope you've had a great Wednesday. It's been a big day for mortgage news and stats. There are so many ways to explain pieces of what I'm about to tell you that it's going to take more than one video in order to make this simple. But today, we're just going to address the macro part of this. The share the screen here. Still learning this a little bit. So this is Bloomberg this afternoon. This morning, the big news was um, if people are waiting on NVIDIA's reports to come out, that's going to affect the stock market. The experts believe that NVIDIA will report better than expected earnings, which should send stocks higher. Um, this is big news right here that so the Goldman Sachs CEO is forecasting zero rate cuts from the Fed this year. That's not completely unexpected. The Fed keeps sending mixed messages, and they tend to keep trending away further and further from them actually cutting rates this year. There was something right down here. This has been updated and refreshed about existing home sales have dropped quite a bit. It doesn't appear to be on the main screen right now, but that's some interesting news for real estate business. Do you want to tie something else in? Because people think that the Fed Reserve announcements affect the interest rates for mortgages. Now they have a bigger impact on trends and on um, basically the HELOCs, personal credit lines, and that sort of thing. This is the 10-year yield, or the yield for the 10-year treasury. Typically, when the Fed makes these big announcements, this actually ends up being a little bit more conservative and being leveled out compared to what people think will happen. This also tends to track trend wise with the 30-year fixed rate mortgage. So when the yield on this goes up, the 30-year fixed rates usually go up on the market. And this is intraday. So this is where they closed last night. Overnight, people thought there would be some major announcements from the Fed today. So this morning, the yield opened because people sold. When I say people, we're talking about major corporations and governments sold the 10-year treasury bonds. They were a little concerned about inflation. Um, and you see over the day, it's evened out a little bit. It's come down. Um, it's been high. Look at the 3 month. You can see it's a little bit of a towards the tops of the mountains. 6 months, we're going back to December. You'll see something crazy right here. Last October and November looked like we were in the Alps. So in this period, rates were around 8 for a 30-year fixed rate with good credit and 1 point. Um, the yeah, this morning, this is a segment that we'll do later, but typically when the stock market falls, investors are pulling money out. And a lot of times they put it into buying bonds, such as treasuries and mortgage-backed securities that they see are a little bit more conservative and not such a risk. And when they buy the bonds, the yield curve goes down as well as rates. Um, like I said, that's a different discussion. But this is, you really want to see how this is crazy. This is over the last 5 years, and we'll see how long it all goes. This takes us back into the 80s. Rates in here for a brief period were 18, 19% on a 30-year fixed. Um, so the market's a little mixed today. We'll see what happens with NVIDIA. People probably will pull some money out of the bond market tomorrow and put it into the tech stocks when NVIDIA comes out, because that's going to affect Microsoft and a bunch of other companies. Anybody's been following, was it microcomputer, or is it S? Anyway, there's a company that has initials that are like SCMI, that has been a hot hot topic here lately. But just know that these Fed announcements don't completely affect things as much as people think. Usually the bond market is taking that into consideration before the announcement. So the meetings that came out, the minutes of the meetings that came out this morning, said that they're going to leave rates basically stable and at least for now. So we're on cruise control. As I've said before to my clients and my realtors, if you're concerned about the affordability of housing, the best thing to do is to get a house, refinance later, because home prices are going up. And that is a whole nother set of discussions that we can have. Their reasons for the home prices going up are not going to change, no matter how much money the federal government throws at it. Anyway, take care, and hope you have a great week and an awesome Memorial Day weekend.